Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Excuse me, my voice is going to be a little bit like squeaky here while I'm clearing the gunk out of it. Wow, we've got some stuff happening today. It looks like we did have the ADP numbers. Let me come in here really quick and pull those numbers. U.S. ADP employment change, 183,000 versus 150K. Now, note that this report is watched because it, has some follow through into the non-farms report, but lately it hasn't been a very good predictor at all. So we'll see. Friday should be a pretty big day, but we do here in about a minute get the jobless claims. No, not the jobless claims. That's not today. We get the Treasury quarterly refunding, so that's a relatively significant thing. I'm not seeing polling, but that is a big deal. So, yeah. Hold on a second. Ah, there we go. That's much better. Yes, U.S. trade balance. Also coming in. I was gonna say that we have jobless claims, but that's tomorrow. I'm not sure if I'm expecting anything too significant from jobless claims, though. Maybe next week. Maybe next week and the week after that, we might see some things in jobless claims that start to make people go, But this week, I'm not so sure. Okay, so here's the okay. Pretty good rise. Okay, well, let's come into the charts and take a look at where we've been. So I tell you what, man, yesterday we were long. That was a really, really awesome call. But we were just making a play on the ISM number. This run that we've had in the Treasury, I was not expecting that. Look at how much it is up overnight. That's pretty crazy. Yeah, Ayo, the one that was like telling me to take it off is like, you should have held it. No, I don't think that I should have. I was not planning on swinging that one. So, I wish that I had had some analysis that would have told me that I should swing it. Maybe if I'm looking for swing trades more often, maybe I could have. But what a move! It's pretty good trend. I mean, like, zoom out. That's one of the best. I mean, there's this uptrend right here, mid-January, right? But in terms of like a longer trend, like over 2 days, it's one of the best 2-day trends that we've had in months. So S&P 500 still kind of struggling, and we got some tech earnings yesterday that were not very good. They were not very good. So oil seeing some big volatility here in the past few days. There's the big up and then the big down, and it was all over the place. Donald Trump, trying to hold Iran's feet to the fire and all of these other things. Gold, so gold is starting to look like outright panic to me. And there is still this thing going on with there not being enough gold like at the actual exchange repositories. So this trade is getting cray. And silver not quite breaking out, but it's getting there. Copper kind of following the other metals to some extent. Japanese yen. So Japanese yen saw a really good long too. I was talking to my video editor because he can only do 4x. And I was like, oh, well, but you can trade the Japanese yen. That's like practically the same as the treasuries. Of course, on his chart, it'll be down, but you could have taken it, man. You should have watched the stream. Oh, well, okay. Bitcoin Well, they had a rally yesterday, but they haven't been able to hold that 100,000 market. I think it's kind of funny, like that. This is clearly a sentiment place for them. Like they want it to be above 100K, and the result is that it just keeps fighting over that price. So, well, I don't know. The ADP number was weak, or not weak, was strong, and it caused some weakness in the treasuries, but it looked like they recovered that. And then we got the quarterly refunding announcement. Oh, you know what? I didn't have the news squawk on to hear the numbers that they got on there. Treasury expects significant usage of cash management bills until the debt ceiling is suspended or raised. 125 billion in line with estimates. Okay. U.S. Treasury to auction 42 billion in 10-year notes. Oh, so is there a 10-year auction today? I have that on my calendar. Billsby and Bowman speaking later in the day. The big one, though, is the ISM Services PMI, with the manufacturing PMI, kind of being partly the trigger for this move. So the services PMI should be super, super interesting, right? All right, so... Well, let me eat my oatmeal here, and let's just kind of see if this settles or if there is a larger meta order hidden in here. I think that there should be a really good chance of there being a buy meta order coming in. I have problems in the data of Treasury and Tradeovate. I don't know much about that platform. I don't know what Vital is talking about. Cumulative delta volume profile, market depth, view. I suppose these are all somewhat order flow related indicators. Yeah, maybe somebody else has it. You might have a better chance asking on the Discord, actually. Could you provide me for where I can get free data for Jigsaw? I'm still learning in the treasury. So there's two ways of going about this. One is you can pick a broker now. So if you're going to trade Jigsaw, I think that EdgeClear is a really good broker. At least that's who I use, and I really like them, and I kind of send them their way. There's not, I don't get an affiliate or anything. You can't do that with brokers, but I like them. If you want to go the cheap route, you go for AMP Futures. And both places you should be able to get demos. But they're going to be demos of the major data providers. So basically, you're going to use Rhythmic or CQG. So you could also, I think that you can also go to Rhythmic or CQG's websites, and they have demos as well. And you just sign up for it. And if you already got your platform and everything, you should be able to send them the thing, and within an hour they send you the credentials, and you'd be up and going. So either pick a broker and start talking to the brokers, or just pick which data platform you want and go and find the demo for the data platform. Octavia says 4.5 in the 10s will be on everyone's mind. Could be. I mean, that was a ways ago, though. But could there maybe be some momentum on people trading the absolute value of the interest rate? Could there be overall money changes in markets because of the absolute interest rate? I think so. S&P 500 is on a pretty okay rally right now, too, by the way. You want data for treasury? Both of them will provide it. My recollection, it's been a while since I've it's been years since I've done this, but I'm pretty sure that both Rhythmic and CQG will provide you data for at least the 10-year and the 30-year. I want to share a link. Can you put it in Discord? So you can try putting it on Discord, like message it to me on Discord, or you could put spaces, replace all of the periods with spaces. That sometimes works. Well, the last few times I've told somebody that, I never saw a message, so that maybe they've figured that out, and that doesn't work anymore. So you're saying that it won't let you sign up right now? Yeah, that might be a temporary thing. I don't know, maybe try CQG. That is kind of odd. I run into that bug with my shading indicator again. I gotta figure out what the deal is with that. Xian might be along. Well, I'm thinking, so the Treasury refunding was in line. That was one potential hurdle that could have caused some problems, but we're okay there. And we do have PMIs. PMIs, they are looking for a reading services PMIs of 52.9 versus a previous reading of 52.8. And prices paid at 65.1 versus 64.4. So I think that there's a pretty good chance there that the prices paid could be less. And, if the kind of the heuristic that I use in this situation is that, like, when things are beating, everything tends to beat. And when things are falling short, everything seems to fall short. So I'm leaning on the ISM being lower than expected. And that combined with the momentum and everything else that we got, I think it says that we should be looking for a long. But at the moment, I am not seeing a lot of support for it in the order flow. So, meh. Which VWAP would be more meaningful for a day trader? I don't know if it matters, dude. Generally speaking, especially if you're trading like equity indexes, the volume when the regular session starts is so much significantly higher compared to the volume in the pre-market that the volume in the pre-market doesn't really matter, and the two kind of consolidate in the same place very quickly for VWAP. When you're looking at things like volume, the point of control, that maybe is a little bit different. But and early on, of course, it's going to be different. But like, there's this broader thing, which is that if you have a line, that line can mean something, but that does not necessarily mean that that line is good for signals. Like, I think that my inventory cost basis is a good example where the market maker's average position in is a factor that matters, and you will see market makers do things at those locations that can cause things like hard bounces and so forth. But trying to predict if any one particular move towards those lines is going to go through or bounce is a crapshoot as far as I can tell. And the same thing happens with VWAP. Like once you establish that a particular line has some significance, what ends up happening is the market just toys with it, right? So that's where I kind of get into, like, well, okay, if you were using the line as an entry signal, then those exact numbers matter, right? But I think that the more broad picture, the difference between the two probably doesn't really matter. Brinton says, I want to gain more experience in dumb trading. How do I achieve it? You gotta get your screen time. Come here every day and talk with us. And you do that for several months and you'll get a hang of it. It's so the robots that trade this stuff, a lot of the ways that they're doing this is they're creating like recurrent neural networks, things like that. So that they are essentially kind of duplicating a person looking at the DOM and watching it. And now I have a video series about order flow. If you haven't watched that, you should watch that first, because what that does is it kind of gives you the, like, it tells you what you're looking at, first of all. Maybe you already know that stuff, though, if you're asking about it, right? But it also goes into like some of the empirical properties of it and how it works and so forth, right? So you want to get those things down first to have an idea of like what really matters and what really doesn't. And then, you know, pick up, get a feel for it from watching it and watching it live with other people. Is it possible to make a profit scalping the bid-ask difference in ZB? Well, I suppose anything's possible. You're probably asking the wrong question, right? It's hard. Like, you know, getting a good spot in the queue and playing that game is really hard. There are some places in ZN where it seems like I can work it out. It works really well. But, you know, like, there's slippage involved. That's kind of the problem with that one. So if you screw it up, you lose 2 ticks. So it's possible, but it's not really the game that I would recommend retail traders focus on. It's something more that I would play around with for, you know, a few weeks, to learn. But generally speaking, I think that we as retail traders, that our edge is going to be more applicable, kind of going to a higher time frame and being able to predict large trends before they happen. Rob Smith's The Strat. You guys have brought that one up before, haven't you? I don't remember I don't think that we actually went that far into it. Why do you say that there's some evidence backing it? How long do you run your trades? Ideally as long as possible. So if I can get in the first 30 minutes of trading, I don't know, I was kind of reading it long. I was saying the order flow didn't really support it. Later in, we've had a sell. So I think that kind of destroys my thesis, and at least until ISM, right? But if I can take a trade in the first 30 minutes and hold it until like the London close, that's ideal for me. I don't want to hold something longer than that, because then I feel like I have to babysit it, and do you hold positions for days? I typically don't, but I've been experimenting with it, and I think that longer term we do want to move in that direction. The conclusion, one of the conclusions that I have come to through all of my research and my back testing, is that the higher of a time frame you're playing, the better your chance for success. There just seems to be this one little dip where it's like if this is time frame and this is chance of success, there's like, at really short time frames, there's like this dip where it's like the robots control it, right? And then there's like intraday trading, which is where we play. And then the higher time frame you go, the better your chances are of success. And this is like buy and hold. Right? You just buy stocks and hold them forever. That's the highest time frame strategy, right? The higher your time frame, and really it makes sense. The longer that you hold it, the more volatility that you expose yourselves to, the better chance of profits that you have. It's really that simple. Time in the market beats timing the market. It's absolutely true. Now, that doesn't mean that there's no reason to trade in here. Okay. But if you're really struggling, one of the pieces of advice I can give is try a higher time frame. Now realize that I am pretty like anti-technical analysis. Well, specifically, I'm anti, price action. Most retail traders are trying to trade patterns, and I understand why. Okay, like I really think one of the mistakes that we make in trading is that we base our trading based on what we think is available to us, right? It's like, well, if I was able to buy this report and buy this report and this thing and that thing, and then I could trade on that and I would probably be profitable, but I don't have the capital right now to risk on that thing, so I'm not going to trade that way. And what that results in is most retail day traders trying to use the free stocks that they get on TradingView to trade stocks, which is why they have the pattern day trader rule. You have to have a certain amount of capital to do that, and yada yada yada. But when really what you should be doing is you should be saying, who am I? What are the things that I'm good at? What is information that is available to me that's not available to everybody else? What is background knowledge that I have that other people don't. And if you don't feel like that you have any of that knowledge that will help you in the market, then think about the places where you could possibly develop that the best. So one of the traders that I follow, commodities trader, he has a podcast now called the something source. What is it? The Pure Source podcast. Where'd it go? It's not on my Spotify list anymore. That's funny. Oh, Strong Source. This is the Strong Source. And when he came out of school, he didn't know anything, and he went into the cocoa market. And when working for a commodities firm, you're going to go on trips to the places that they make cocoa and see the cocoa fields and all of these sorts of things and understand it to develop that edge, right? So what we should really be thinking about is, where do I have the best chance of developing an edge and going there? And if that requires certain capital expenditures and things like that, okay. Hey, you know what? Lots of people, they spend hundreds of dollars a month on their hobbies. Why can't I spend $100 a month on a subscription or something like that? Right? Because if you just kind of go based on like what seems to be available, then what ends up happening is you just get herded with your attention bias to the worst games, essentially. Right? So the technical game, watching for price patterns, that's been all mined out. Like the market is random on those time frames. It doesn't work very well. Right? So there's a lot more edge for us as retail traders in what are all the things that are going on in this market. And I already kind of went over it earlier, right? Okay, well, we had the ADP. The ADP number was hot. We had the Treasury refunding number. That was in line with expectations, so that was good. We have the ISM number coming up. The ISM services number. The manufacturing number yesterday was light and kind of started a strong rally. And then because we had such a strong rally, you might be getting momentum traders triggered in here. Okay. So there's a bunch of things that suggest that we could see more buying today, although it's going to be a little bit tepid until the ISM. Probably now. Right. And those are all things that we know about the market that could potentially predict future orders. They have nothing to do with what the current price is or what you see on a chart or things like that, right? So the trade that I took yesterday is really just like the quintessential example of the kind of trade that we want to make. So we knew that there was a manufacturing PMI number coming up. And I said, sorry, and there was a JOLTS number coming up. The JOLTS number was really the one that did it, wasn't it? The job openings number. And I said, well, Seth, I'm looking for a job and I am applying for a lot of jobs. And I know just from applying that there were way less openings in December than they were in November. And I watch LinkedIn all the time, even when I wasn't actively applying for jobs. So I know how many openings are and everything. So I made the prediction that the JOLTS number was going to be less than the market anticipated. And I was correct. And I hold the trade until all of the orders that I expect to come into the market based on that, particular piece of information becoming more available to the market. Right. So it tends to be as long as it tends to be as long as I can, but really I'm looking for that flow to come through. If it's a flow and I'm expecting that flow to come through for multiple days, then I'll hold it for multiple days. But usually I don't have that. Usually it's just for that session and I'm looking for something, especially in the treasuries. Treasuries have tendencies to make, if they are trending, it'll go all day. So you want to hold it as long as you can. order flow is Hesse. Look, I don't know what you meant to word you meant to use there. Looking to see if 130 holds. Yeah, it is. Well, so maybe you meant heavy. Ah, heavy. Yeah. Well, so we're coming to the cost basis. So that is a spot where we could potentially see at least a short-term bounce, or they might hug it for a little bit before continuing through it. So that is a key spot to watch for sure. Overall, though, the order flows that we've had this morning are to the short side, and I'm not really sure what is the driver. Perhaps the whole Trump trade, short interest rates, yada yada yada, inflation is trying to reassert itself. That's the only possible flow I can possibly think of. Yeah, the 93. It's a pretty well, like the total net change from the high is 30K. So, but on my side, since it's not matching up with my anticipated order flows, I'm just kind of like, I'm on the sidelines now, right? I don't know why it's doing what it's doing, so. I'm not the informed trader, then I don't want to be trading. Oh, that's right. Okay. I do know the strat. I do know the strat. Although this is a little different, interestingly enough. So there was these guys, like, I want to say they were like R3 or something like that. It was like RRRR. And they were selling like a course and the whole thing. And they were kind of doing the same thing. So maybe they had stolen it from Rob Smith. I don't know. But okay, so here's the story. I would consider him my mentor. I absolutely would consider John Bottomley as my mentor. He used to run a trading room that was focused on treasuries, and I just wanted to have other people to talk to about treasuries. So get in the room. And, I programmed NinjaTrader strategies, so I wasn't going to pay for the room, but he would ask me to program things for him, and we would do it. And I tell you what, man, I can't tell you how many days where it was like all afternoon, we were just, programming, backtesting, showing him things. And, so it after COVID, the beginning of COVID, he brought this thing to me, and I was like, okay, let's backtest it. And this was kind of the point at which I really started to get burnt out on backtesting. I had backtested so many different things. Okay, let's do this one. And this one was interesting because it did allow us to build a bunch of indicators and so forth that were really interesting and useful. So if you go back on my channel, you can find a video called trading multiple time frames. And that basically introduces a bunch of tools that help you do these things. So one of the tools is a better bar type that is really good at overlaying the bars on top of each other so that you can see. I can have a 1 minute chart, but I can also tell really clearly that the 1 hour time frame is green and what. Also, it had these things that we called like traffic lanes or something like that, where, you know, there would be like these lines at the top. It would tell me whether we were up or down on different time frames. And so what you would do is you would wait. I don't want to be buying unless we are up on all of the time frames. We're up on the 1 hour time frame, the 1 day time frame, the 1 week time frame, the 1 month time frame. And then I'm going to go and I'm going to look for a trade, right? And then the time frame confluence, yes. And then the whole setup is essentially, if there is full time frame confluence, you look for certain candlestick patterns. And then you take the trade. Okay. So I backtested it and it didn't work. is the long and short of it. I backtested it and there was some really interesting statistical things about it. But ultimately it didn't actually work. And it kind of taught me a couple of things about like some of the issues that you get into with backtesting. That was kind of the part where I really started to learn that like 1 year is not enough. It really, really needs to be 5 years. I hit that so hard because for a long time, that was something that I didn't understand. I had read Taleb's book and all of that, but it didn't really occur to me that like 5 years was the amount of data that you really needed to get a statistically significant result. So once I started looking at like a 5-year time frame, it didn't work. That was when I got really frustrated and I said, you know what? I really think that patterns just don't work. And so I switched to, I'm just going to read as much news as possible. I'm just going to binge on Zero Hedge and News Squawk. And I'm just going to focus on understanding my market as well as possible. And I had so much more success after that. And I think it took a couple of years to work out, but now I kind of feel like, like if you are the informed trader, trading is easy. The issue is knowing if you're the informed trader. So there is always that little bit of uncertainty. But when you're correct, the flows come in, it goes your way, and you really don't have to deal with all of these, all of these other kinds of issues that cause you stress, and it's not going the right way, and all of these sorts of things. If you're right, you start to see the flows within a certain amount of time, and then all you got to do is just hold on. Right, big change in my trading then, and then I read Trades, Quotes, and Prices. This was where all of the things that I had been told by the traders at the bank that I had spoken to, I started to understand why they were saying the things that they were. And I understood all of the math about it and the things about the market that the market does that are actually proven. So that kind of helped me to be able to watch the order flow on the DOM and correctly interpret it. I always had these things where it was like, okay, so maybe I think it's going to go long, but like, are they buying it or selling it, right? Like, because sometimes the market orders will just come through and just completely sweep through it and push us somewhere. But then sometimes the limit orders will hold it. And how am I supposed to know which one it's going to be? I have to make this bet on whether liquidity will hold or whether it won't hold. But once I got into the research about it and all of that, what I found was, oh, okay, somebody that's really big in is trying to buy things. They have to use market orders. At least half of it is going to end up being market orders. Otherwise, there's just not enough, they're just not going to get filled. There's not enough liquidity for them. So they have to use market orders and they have to split it up. So that was the first kind of thing, is you can kind of assume that the simple heuristic is that the market orders are the leaders, are the pushers, right? And if they aren't, then you're in a market where somebody is not picking up, where there's not new money coming into the market. It's just the market maker's market making, or you're being beholden to some sort of a correlation or something like that, right? Okay. When you are getting market buy orders, those tend to persist for like all day, because it's the reason that these behaviors exist is because of these large buyers buying or selling over long periods of time, because the market liquidity is just not enough to serve them, right? Understanding all of these things allowed me to interpret the order flow correctly. And then after a few years of watching it like that and getting things calibrated correctly, then it gets to the point where if I have a good basis for a trade, I catch really good trades, generally speaking. And then I guess the other thing, and I think that this one is more recent because we've had this for a long time, but I didn't really trust it. I didn't really. The inventory cost basis, man. I mentioned it earlier, didn't I? I said, okay, well, trying to predict whether it's going to bounce off of this line or not is probably a fool's game. It's really good if you were short, take your profits one tick before that. But it hard bounced. It hard bounced. Look, there's nothing else there. Like, why did it bounce there? I'm telling you, it's because we have a model that is pretty good at telling us what the market maker's position is. What the market maker's position is does not necessarily predict what's going to happen next. Why? Because the thing that is really going to determine what happens next is the market orders, right? Market orders. Those three things combined seem really powerful. Can you name that book? Trades, Quotes, and Prices. Financial Markets Under the Microscope by Jean-Philippe Bouchot. So let me tell you about this book, okay? Actually, no, hold on. This is some food. I'm going to finish this food and we'll talk. So let you talk. I think I'm gonna make a video about this stuff actually, for next month. So it would be a March video. I think the second video for, because what was the first one? I can't remember what it was that we released last week. But anyways. Have you run a test on those hard bouncers? How often does it move through? It did. But the back testing on it is kind of sketch. So, and I only recently added caching to that. So maybe in a year we can do a better back test. But when I was doing that back testing, it seemed that trying to bet on the bounce didn't work very well. Because, you know, like if we're having a really hard meta order sell, you know, it's going to go through it. Now, I do think that with all of the other information that we have, that you can make pretty good predictions on it. Like, if there is not a large meta order active in the market, and there's not like some sort of news or anything like, you know, large order flows that you're expecting that day, you're expecting a range bound day, then very high probability they're going to bounce. Seems to me that they bounce almost every time off the first one in those situations. So the key is using your informational edges to know whether it's a trending day or a range bound day, which I think we've gotten pretty good at too, by the way. Used to be all the time. I'd think something was going to happen and I'd take a trade and then it'd be a range bound day, and I was just constantly frustrated by how range bound things were all the time, and now that doesn't bother me anymore. Okay, so let's talk about this book. So there's this guy named Jean-Philippe Bouchot. Jean-Philippe Bouchot is the boss. I want to interview him at some point. People say don't meet your heroes, but I'm gonna meet this guy. I am so impressed with his work. So Jean-Philippe Bouchot is the lead moderator for the quantitative finance section of archive.org. That is ARXIV.org. So you might be familiar with SSRN, where you can go and read studies for free about like, and they tend to be more about psychology and health on SSRN, although there are some related to finance. ARXIV is basically a competitor to SSRN, and it has the best quantitative finance section. So you go here and you will find peer-reviewed studies, although these ones they post them here like before they get peer-reviewed. This is kind of like you post them here and that's where people get interested in them before they go to like the big journals and get peer-reviewed and stuff, right? So you can come in here every month and, see the latest studies, etc., etc., etc. Okay. Jean-Philippe Bouchot, he is the lead moderator at archive.org. He is also one of the founders of, what is it called? Capital management. So they are basically the most successful commodities trading advisor company in the space right now. They run momentum strategies, and they're the best at it. Okay, so this guy Jean-Philippe Bouchot, his story is that he went into physics. He was in physics and all of that. And at some point, he got pulled into doing finance stuff. And so he did a lot of really key early research into time series research, particularly things like, if I have like 100 different assets, and how do I figure out the cross correlations between them to optimize my universe of assets that I trade for a momentum strategy. And that's why they created capital fund management. Okay. And he was kind of, I would say, one of the people that learned from this other guy I'm going to mention, who I also really want to interview, but I can't seem to get a hold of him. We're going to interview Jean-Philippe at some point. I think that is going to happen this year. Doyne Farmer. So Doyne Farmer, his story was that he was interested in the study of complexity. So there's these whole things where it's like, if you have a double pendulum, can we find a video of that? Yeah, this right here. So with a double pendulum, you let it go, and this pendulum will just move wildly. And if you try and predict how it's going to move, it's extremely difficult to predict. But the guys in physics, they've done really heavy research on this, and it turns out that you actually can kind of predict it. It's just that like super teeny tiny little differences in like where it starts or where it is can result in wildly different behavior. So it is a chaotic system. So Doyne Farmer became interested in studying chaos, and kind of got pulled into doing it in finance. So it started with him and a buddy. They were going to try and make money playing roulette. And they kind of found that there is a certain situation where you can predict what number it's going to land on. And they built a computer that they put in his shoe, and they used that to play roulette and win tons of money at roulette using chaos theory. Okay, they then went and created something called the prediction company, and the prediction company was essentially the first quant firm. They were the first ones that really went in and looked at the market and are like, can we use our math and our more advanced understanding of statistics and computers and all of that to make plays in the markets. Okay. And that was very, very successful. They're still around, although they got bought out and absorbed into somebody else. I forget who. Okay. So Dwayne Farmer, he has recently wrote a book called Making Sense of Chaos, where he talks about this complexity, what we would call complexity economics. So taking this study of chaos theory and applying it to finance. And what we find essentially is that you need different kinds of tools to study these sorts of things. Because when you're talking about markets, you're talking about millions of different people, interacting with each other, and predicting like what those individual people are going to do and everything is kind of difficult. But if you understand why they are behaving the way that they are, and you model that with all of the complex interactions of them between each other, when you get up to the high level, there can be very clear behaviors, things that we will see in the regular economy. So what we can do then is we can say, okay, here's what we see in the regular economy. If we create a bunch of agents that use these heuristics, do we see that behavior in our model? Okay, now we've been able to model the behavior of the real world. Now we can go back and we can say, okay, what if we change their behavior? What if we change this, or we add this rule, or we add this rule? Does that change the behaviors at the top level? And now we have a tool that can actually make real progress in economics, right? It seems like economists are always wrong. They say the economy is going to do this or that, and it doesn't. They always miss the biggest things, like when, everybody misses when the recession is going to happen. And then they will suggest that we do some certain thing, and they implement the rule, and it doesn't work out the way that we expect it should, right? Well, it's not that economics is junk science. It's that the tools that they're using are just woefully inadequate for the challenges that we have in the modern world. These sorts of things, they worked in the 1600s, but as society has gotten more complex, and the complexity is increasing every day in the information age, and now the artificial intelligence age, right? We need tools that are able to scale like that, and agent-based modeling is the thing. So these guys are essentially a new wave of economics, and there's really three kind of buzzwords that we identify this group of people by. One is econophysics. So basically they are taking math from physics and trying advanced math from physics and applying it to finance. The second one is complexity economics, agent-based modeling, and then the other one I would say is order flow. Now, order flow is a little bit of a tough one because retail traders have co-opted the term order flow, right? We use the term order flow in a way that is very different from the researchers, okay? But if you go and you read Albert, the kind of like one of the key starts for like the study of order flow was Albert Kyle in 1985, and he uses the term order flow in his paper from 1985. So that to me is like the earliest of the term I've found, and is the origin of it, right? So these guys are essentially the forefront of a new revolution that I think is just as significant as like the Keynesian revolution that we had in economics, right? Like our understanding, we're really going to get to the point now, once this becomes more widespread and we really, they really start funding the research and it starts to dominate the research at the schools, it will happen. We will start to get to the point where our economics really work, and we'll be able to solve a lot of the economic problems that we have, assuming that we have the political will. Probably we don't have the political will, but so Jean-Philippe Bouchot, he was kind of learned and did a lot of research with Doyne Farmer, and he wrote this book. And this book is basically everything we know empirically about the markets from the last 40 years. And most of the things that we can learn about the market, or the things that they've proven, are things that you see in the order flow. It's a really good book. It is, but we are talking like heavy research, right? If I open up almost any page, I just open to a random page. These are citations at the end of the chapter. So every chapter has dozens of citations, studies that you can read where they got that information from. I'll open to another random page. You are going to see actual. Come on. You see that table there? There's a statistical chart, a density chart of some sort, I think. Oh, the lag impact of meta orders. Okay. Real data. Real empirically based data. Let me find. You're going to see mathematical proofs. How they modeled things and all of the formulas and everything. It's a heavy book. Okay. But at the end of every chapter, they also kind of summarize the key takeaways, the key things that we learn from that research. So even if you don't completely understand everything that they're saying, there's really good information that you can pull out of it. And what I have done, essentially, is I have taken that information and have kind of distilled it into how this information is applicable to you in retail trading. And that's essentially the stuff that you get from the order flow video series. I'm to start out explaining to you what order flow is and how to watch the DOM. And then I start going into some of the key empirical properties of the market and how those can potentially affect your trading. So if you haven't watched the video order flow series, you go watch that. You don't necessarily have to read the book, but if you're really dedicated, I would read the book. Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot. And of course, the YouTube channel is about day trading. I mean, we have the live every day and all of that, but I am trying to shift as much as I can towards bringing that knowledge to the rest of the world, because I believe that there is information in the complexity economics and everything else that has great value to the world. It would significantly change the decisions that we're making in the world and that need to be shared with the wider world. These guys have been doing it for decades now. But, it's like they've been doing it at these companies and, they've been making money. Now these guys are getting to the point where they're retiring and stuff, and it's time for the rest of the world to know about it. And I just happen to be the lucky guy that knows about it and nobody else on YouTube is talking about it. How many pages are in that book? I think it's like 500 pages. 450. How far back do I need to go before I got to that whole spill? Economic science? Yeah, well, I mean, economics is a real science. It's in its infancy. The tools that they've been using up until now were woefully at. So there's kind of another part of this, and this is the part that I've kind of been hitting the most. Like, I made a video about this yesterday. If you go and you look at my shorts, and that is bounded rationality. People want to optimize their utility and make the most optimal choices, but they don't have the ability to. They don't know everything. They don't have all the data. They are not necessarily sophisticated enough to calculate the optimal solution. And so we are boundedly rational. We use heuristics to make our decisions. Shh, don't post links. Yeah, you can find a PDF of it somewhere. You can search Google and find a PDF of it, probably. Can you tell me the timing of your live every day so I can adjust my schedule? Yes. So we start our stream at 8:20 Eastern time, which is the time that the Treasury market opens, or the regular session for the Treasury market opens. So we're here from 8:30 until about 11 o'clock Eastern time, every day, every weekday. Okay. Back to your comment on what's trending and what's ranging, and you do a good job of determining it. And I mean, every inside bar is a range on a lower time frame. It cannot be. Well, yes, but the problem is that you have to be able to identify that it's going to be an inside bar before it actually is. You know, that's kind of the hard part. Is that when you look at charts, like there are things that you can see on charts. There are patterns that you can see on charts. The problem with the patterns is that the pattern is the result. You know, I'm going to make a prediction, and if my prediction is correct, I should see the pattern. It's not the other way around. You see the pattern, and then you're going to make a prediction, because the existence of the pattern does not predict very well what's going to happen next. So, like an inside bar, it's like, okay, well, by the time that you know for sure that it's an inside bar, like, there's not a trade, is what tends to happen. So but the one thing from the whole Rob Smith thing, though, that is interesting and I think kind of a valuable insight is that volatility tends to expand. So, like, he'll constantly be showing you that, like, the range of things is actually increasing. And basically what happens is at the beginning of the day, you know, people come in and it increases volatility. Yeah, and they go back and forth until one side, you know, picks one side and you get a trend. I don't think that the patterns, again, like, by the time you see the pattern, like the trend is over. But, you know, there is something to be said about, you know, what causes volatility. Orders cause volatility. So you see more orders during a certain time frame, then you should see volatility expand. Can a block trade or an iceberg order be predictive in the short term? On its own, it's not very. So there are some things that on very, very short time frames you can take advantage of, right? For instance, if you are a high frequency trading robot where you are constantly putting bids and offers out there, and you have an order at the front of the queue, and then you detect that there is an iceberg there, well, that would be a really good play for you to be like, okay, I didn't like my spot in the line here, but because there is an iceberg, there's actually a really high probability of me getting filled on the limit there now. So especially if I can already be long, or I can somehow get long at one tick lower because I'm at the front of the queue. I'm pretty safe to put my limit order there at 18 and get filled, or wherever the iceberg is going to be, right? So that's something that's like hyper short time frame, right? If there's an iceberg, does it predict where we're going to go in the next 5 minutes? On its own, no. But what you can do is you can do this, is, you know, we go through and we list, here are all of the flows that we're going to see through the day, right? Well, based on the flows that we expect to see, we can actually anticipate some things about how they are going to execute, right? So if I think that they're going to rebalance, they're going to rebalance for the end of the quarter or something like that, right? Well, one thing that you're going to see is a lot of that volume happens at the close. So like on the S&P 500, that last day of the month, or the last day of the quarter especially, watch the S&P 500 into the close. It does zany things, and they're often really crazy uptrends with huge amounts of volume. So a lot of that happens at the close. They're also going to do very passive, price insensitive buying. So they're going to buy, probably half of it at least is going to be market orders, and they're going to push it up in trends, and you're going to see waves. So I know basically based on the flow and why they're executing it, how it's going to behave to some extent. If it is, you know, there was a piece of economic news that really, really changes people's opinions of the markets, and they're all panicking to switch their positions, right? Then it's going to be different, right? It's going to be way more frantic. If it's a hedge, if I just bought a ton of treasuries and I'm just basis trading, so I'm just selling a couple of futures to hedge the treasuries that I already hold, right? I'm hedging. Those are the guys that really like to use icebergs. Okay? They really use icebergs. So if one of the flows that I was expecting, and a good example, probably a better example of where this applies, is ahead of auctions, right? So if it's an auction day, if there's a 10-year auction, I saw something about that there was a 10-year auction, but I don't see it on the calendar. On auction days, you should expect to see large icebergs. And in some cases, you know, you're expecting a certain flow, and then you see the iceberg, it kind of confirms it, and you could take a trade off of it, and it could be predicted. One combined with other information. Get what I mean? It's an inside bar until it breaks a high or a low. Well, yes, but you cannot quantitatively say for certain that it is an inside bar until the bar closes. Right? Because I can't come in and say, okay, here was a bar, and here is the top and bottom, okay, and now we're get the next bar, and it's been 5 seconds, and so far it's done this. Okay, that's an inside bar, because if it's a 5-minute bar, there's still 5 minutes to go. So what are the chances, given the volatility was already high here, the chances are it can probably go just as much. So how long do you have to wait until you can say for sure it's an inside bar? But then there's another issue to it, which is that when you get an inside bar like that, it usually means that it just stays there. So and sidebar doesn't necessarily. Yeah. Okay, I just finished high school. Which one is a perfect degree for this type of trading? Okay, so if you just finished school and you want to trade, I would recommend, you know, getting a finance degree or a quantitative finance trading maybe machine learning. Okay, but you're gonna want to go to the right school. I'm not going to say that like you can't go to your local university. You probably can, but if you can go to an Ivy League school or certain schools that specialize in this stuff, like Chicago University, better chance. And you want to follow individual firms, quant firms, or maybe commodities trading. You know, if it was me, I think I'd be more interested in commodities trading. So like Cargill, for instance. Follow them on LinkedIn. Interact with them. Get to know the company. Like target a specific company. Right? I'm plan on interviewing some people and we would be able to ask them some questions about that, because that's something that because I didn't do that, so I don't know if I know as much about it as I would like. But we can talk to some people and they might be able to give us some better tips about what you should do. No trades for me yet. I missed the opportunity to short that spike into 20 and just kind of chilled. Yeah. Well, I tell you what, man, it has been kind of like acting a little bit range bound, but you know we got news in 15 minutes, so I don't know if it really matters. You spend so much time trying to find the most abstract, cutting edge mathematical theory. Yeah. I mean, one of the issues that I run into is that the things that retail traders want to do are actually like, it gets boring really quick. Because everybody's conception of the market is just way too simple. I was talking to somebody yesterday. They were like, I was like, oh, did you backtest it? And they're like, well, not really. I was like, I can backtest it. And they're like, okay, so I'm using this moving average crossover as a filter, and then when it's at support, and I was like, oh gosh, right? Like the setups that retail traders want me to look into are just so dumb, in my opinion. Right? And there are things that are like, I would do it if it was interesting. It doesn't have to be something that I really think is going to work. It could just be something that's interesting to program. Like you have a hard time quantifying what it exactly is. Like, oh, well, it's when support happens. Well, okay, so let's define how you define support and program it. Right? That's more interesting. If it's hard, if it's something that people can't figure out how to do. But most people, or they don't even understand why they think that something is support or not. Sure you can. It's an inside bar until a higher or low of a previous candle is broken. Okay, so if you took that approach, then you would always assume that every bar is an inside bar. Well, almost, I guess it depends on where the open is. But you would always assume that everything is an inside bar and then take a trade off of it, right? Or take a trade once the inside bar is broken is another thing. But like I'm telling you, I've back tested that. It doesn't work. But this is where the multiple time frame thing is really interesting, right? Because I can come in and I can say, okay, here's a 1 minute bar. Here's the current 1 minute bar. Okay. I want to be able to trade it as soon as it breaks this high, which it could do well before the bar closes. This next bar could actually be like this, right? And I want to take it like as soon as it goes there, right? So then I would want to do something like every second go and look at it and see if it matched my qualifications or things like that, right? And you have a strategy that's using multiple time frames. You can do stuff like that. And that's what we did. I'm just telling you, it didn't work. I think ZB is going to keep that slow trend a little more, even though interest rates against the wall. Investors seem to be changing their mind about leaving. Yeah, I don't know. So this recent little move back up to the high kind of looks to me like front running the ISM number again. So is it like yesterday? I totally would have taken it if it hadn't played out the way that it did. But I should note, by the way, that we did see a change in the spread. There was some flattening, so it seems like that ZB is really pushing the way as we flatten. I think another thing that's interesting to me about quant trading is that, from what I can tell, the strategies that the big players are using are really not as magical as we think that they are. They really fit into a couple of major categories that we as retail traders are like, oh, well, of course. Okay, like arbitrage. Well, of course it's arbitrage, because I can't do arbitrage. I'm not fast enough, right? Yeah, a lot of what they're doing at these firms like that is they're doing statistical arbitrage or market making based on order flow, and they're using advanced machine learning concepts to assist them. So then there's really, really interesting and advanced stuff in there, but like the base of what the strategy is doing is not all of that special. And we want to have this sort of thing where it's like, there's got to be some sort of special pattern in there that predicts where it's going to go in the next 5 minutes. And I really am not sure that it exists, guys. In order flow, when you combine it with like an informed knowledge of the markets, maybe. But like just using price, I really don't think it exists. And I think everybody in retail is looking for this magic that doesn't exist, because from all of the research that I've done and everything, like, these firms aren't doing magic. These firms are kind of doing relatively mundane things that we all ignore because we know that they're outside of our reach. I don't know about the back test, but it's nuanced. Yeah, that sounds like that's a cope body bag. That's what that is. That's all. We're possibly not skilled enough to prove it, but I'm still gonna trade with it. Is it safe to assume that you're better with the DOM versus the footprint? I think so. I mean more broadly, D, the behaviors that we see in the order flow. Well, so let me put it like this, okay? The square root law. The square root law is something that is caused by the continuous auction. So like the way that they found these behaviors was they said, let's do an auction where the auction happens every 5 minutes. And then it happens every 1 minute. And then, and we use calculus to figure out what will it do when it's continuous. And so it is the continuous nature of order flow is where you start to see these behaviors. It's also where you start to see things like clustering. Like another really strong behavior that we don't really utilize is clustering. Like if, nothing has happened for a while and then you see one order, you're probably going to see a bunch of other orders after it because the orders cluster, for instance, right? That is like, you're only going to see that when you're looking at it on a continuous time frame, which essentially means you have all of the orders in a list and the time that they happened at, right? So once you start to aggregate them into time frames like 1 minute, 5 minute, etc., then you can't see these behaviors. So that's why I prefer the DOM as opposed to the footprint, because the footprint hides a lot of the most important things that I'm looking for, because I'm literally looking for individual changes in the market depth and, the market depth responding to individual orders. Wow, you made 12K doing arbitrage on sports betting. That's pretty good. It was a finite opportunity. Well, that just means that you sized up too big. You need to learn to calculate how to size the trade. Oh, they banned you? I mean, if you're responsibly providing liquidity, why would they ban you? Most sports books closed down. Oh, I didn't know that. I did a little bit with sportsbook. There's some opportunities in betting books and stuff where you can find like an edge, but there seems to be this kind of like, it's a little bit too shady of a space, you know? The edge is individual trading or adjusting trades, stop losses, take profits as the market changes. There's no edge in a bot running a mechanical one size fits all trade in a dynamic. Well, yeah, but those are all things that you can program. You can program a robot that adjusts their trades, adjusts their stop losses, adjusts their take profits as the market changes. But here's the thing. If I make a robot like that does all of those things, and that robot was to come out profitable, how do I know that the profitability of it was related to some edge in that entry signal that we were talking about, and not all of that advanced position management stuff that we just added? I bet you that I could probably go and replace that entry with a random entry and add all of that position management stuff on top of it, and it would still do really, really well. Which kind of suggests, like everything that I've seen in trading has been, you find an edge, you combine them together, those edges kind of synergize on top of each other and get more. I've never seen this situation where this thing is not profitable and this thing is not profitable, but when I add them together, then all of a sudden it makes this huge profit. In other words, the indicator soup approach. I'm going to add a bunch of technical indicators and combine them together into some complicated way. I've never seen it work. So there's if A is profitable, and B is profitable, then usually A plus B is profitable. But you're positing that there is a situation where A is not profitable and B is not profitable, but A plus B is profitable. I've never seen it. What makes us think that exists? Once you kind of put it in mathematical terms, it kind of doesn't really make much sense, does it? Yes, 50 seconds. Thanks for reminding me. I just heard it on the news squawk warning us about it. So let me pull out my thing here just in case we want to do something based on it. Remember that the ISM services prices paid previous reading 65 or 64 spot 4 and estimate 65 spot 1 is going to be a key component of why the treasuries move. Okay, well, they're moving up. Okay, services price is paid 60 spot 4 as opposed to the 65 expected, so that's good. So I am gonna try. I kind of think that I missed my spot to play it actually. Dang it. What was the top line number? ISM services PMI 52 spot 8 versus 54. Okay, so broad weakness. Okay. Icebergs on both sides at 24 half 25. That's not necessarily something that I like to see. Cumulative delta wise, I think that there could be a decent amount to come out here though after this, so I'm gonna give it a little bit to see if it gives me a good spot. See, I don't like the icebergs on both sides because that's something that tends to create like a little bit of a vortex that's hard to get away from. So I don't necessarily like that spot. If I'm going to take a trade, I would like to be below 24 half now. The number of factors determining when a trade is placed and what kind of order to be placed is infinite. You can't program that. If you can't program that, you can't prove that it's profitable. Like the reality is that if you can't program it, you can't understand why it's profitable. Because it could be like one teeny tiny little thing in there that you don't realize that the edge is coming from, right? And meanwhile, you're teaching people this method. You might not even include that in what you're teaching. And so because you don't know, you're missing the most key component of the profitability, right? But you can, you know, so the first thing is that you say that it's nearly endless, but like, okay, we have technology that can literally test trillions of different cases. You can program trillions of different cases. So first of all, like, I'm telling you, the technology exists to do it. If you really have the gumption to take it all the way, okay? But second of all, I'm not, really, if you have a set stop and target, that generally doesn't work. Having a set stop and target just puts you at the mercy of the volatility. And the results that you're going to get are mostly going to be break even on a risk-adjusted basis based on volatility. That was a really good jump, wasn't it? So we still have the non-farms on Friday, but I really think that all of the data is coming into, hey, like, we can totally cut interest rates. And in fact, I still believe that they could cut in March. I don't think that they will, but I think that they would be okay to cut in March. I think that a year from now, they'll kind of be like, oh, we should have cut in March. Because the upper middle class is getting decimated right now. Okay, but your strategy, you're probably going to do something like, I have a take profit, and because of these factors, I've decided that it's going to go further, and I've increased it, right? Okay, now you have something you can program. If you can just kind of define the rules that you're using to adjust those things based on, right? And here again, there might be all sorts of different parameters involved in doing that, but then we have computers and machine learning to test all of the different combinations of those. So it can absolutely be systematized. The only question, it's a skill issue, right? It can always be systematized. If we can't systematize it, it's a skill issue. But this kind of comes back to the thing that I was saying earlier, right? We trade because we think that that's what's available to us. Well, I don't have the skills or computing power to be able to systematize that and to test all of that. So all I can do is just trust that it works and trade it. And I'm saying, no, that's a terrible way to go about trading. Go and find a way of trading that you do have the skills and ability and resources to do, and go to the place where you have the most edge. If you don't have the edge to backtest things, then probably you should be trading news. Because honestly, if your whole trading strategy is based on, you know, if price breaks out of this inside bar and this moving average is above this, and there's time frame confluence across the board, and you're not a programmer, you're not competitive in that space. Based on tech analysis. Well, I tell you something that I'll tell you about kind of a strange aberration in the market that we discovered that I don't see talked about, and I find really interesting. So there's this idea of there's pivots. So for instance, we have a market that goes like this, right? And then you'll go and get the zigzag indicator, and the zigzag indicator will go like this, and I'll say, see, there's it's kind of like a filter of sorts. It's like a high pass, or it's like a band pass filter of sorts. Okay. And the way that the determines these is it says, if we move down more than X ticks, then that's a new zig in the zigzag. Okay. So that's one way of doing it. But another way of doing it is you could say, like here we're having an uptrend. Here we're having an uptrend. And we're still in an uptrend until I get a close below the previous bar's low. Okay. Close below the previous bar's low, then that's a pivot. Okay. And they tend to do these things. Like one of the things that'll happen is, like, on a trend day, it'll just keep going until there's a pivot. But when there's a pivot, then that's when you maybe see mean reversion. Okay. But until then, it will just keep trending. Okay, so now that you understand that, if you set a chart up, okay, you have it there with the pivots, and you have 5-minute bars, okay, and maybe like a timer, and you watch it, you will see that the market actively fights. The market will actively fight over that pivot point. There will be points where it's about to break it. It's getting below that previous bar's close previous bar's low, and can we close below it? And then this order flow will come in and rescue it. Like they actively fight over it. I don't know how you empirically prove that they actively fight over it, but it seems really clear to me when you watch it that they actively fight over whether the market makes it, especially in the S&P 500. So it comes back to this thing that's like, when you find a statistical kind of like a point that matters in the market, doesn't necessarily make it a good trade, because then the market just fights over that spot. Bro, I use the strat as my... Why are you saying it like that? Like it's like some sort of... Okay, I'm gonna put this in like the most blunt terms I can. Not because I'm trying to be mean, but because this is the only way that I think I can explain how I feel about that. This is like your mom had cancer and some shaman comes in and does a shaman ritual with your mom, and then a month later your mom was cured, and you say, see, look, shamanism works. That's how I feel about what you just said to me. Okay, well, let's go and have that shaman go and visit 1 million different people with cancer and see how many of those people actually get cured, and compare it to the number of people that get cured without the shaman visiting, and seeing if there's a difference, right? Now it's empirical. Right? Okay. You could teach a bunch of people the strats, and you have 100 traders that trade with the strat and 100 traders that don't trade with the strat, and we compare the performance of them, right? I guess you could do that. But, when somebody comes in and they say, well, I don't have any empirical evidence to suggest that there's an edge in this thing. I don't have the ability to back test it. I don't think that it can be back tested, but I believe it works because I've made money with it. Then that's the same thing to me as saying that I've seen a shaman cure cancer, or chicken bones are able to predict the future. It's just as ridiculous in my mind. What language do you use for programming bots in NinjaTrader? C#. So it's, I really think if you're new to programming, C# is probably like the best language to use. Python is a little bit too much scripting-ish for me, and a little bit different. But the C# is where I really think you can dive into like programming, and it has stuff for like GUI and things like that. So I really think it's like the best all-purpose programming language. If I really want to get something done, I do it in C#. It's like saying Trump saying that the sun in the month of April would clear COVID. Well, now that's different, because that's a situation where Donald Trump has a reason to believe that exposure to UV rays destroys the virus and reduces its transmissibility. But that does not necessarily mean that it will result in less cases overall. So he has a theory. He had a theory that was based on some empirical data, but that empirical data didn't directly prove that theory. So then you have to do a further study, and I guess we did, and it turned out that it didn't work that way, right? Although I do think that there was some evidence to suggest that like full lockdowns, like have everybody stay inside, was not helpful, because people were more healthy if they're outside. What other languages are you proficient in? Like, take your pick, man. So for me, it's not really so much a matter of proficiency as much as it is like how much experience do you have with them, right? Because I can program in anything. So I've been learning Rust is what we've been doing lately. So Rust is maybe a little bit of a different thing because you have to deal with memory management and ownership of things. So that's a completely different subject that's actually very complicated and difficult to do. So I'm trying to add that to my repertoire, right? But outside of memory management, like everything else is kind of the same. Python, Java. JavaScript is all, it's all the same. I just have to refamiliarize myself with the differences in syntax. And I need a new mouse. Any recommendations? I haven't looked at that recently. There's this guy named Rocket Jump Ninja, and he has the best mouse reviews, but that's for like gaming. The mouse I have is a Zowie. I think that I would, if I was gonna buy a new mouse, I would want to get a wireless one. Like Logitech has a wireless one with a really low input latency on it. I forget what it's called. Razer mouse, probably. Razer would probably be a good choice. Okay, so I was looking at this. Remember I said I think that there's a hole at 24.5, so if I was going to get in, I would want to get in below that. And there was a brief moment where it was below it, and now it's back above it already. So this is kind of looking to me like something that's not going to let me in. I might be able to scalp some ticks in this area, but I really don't feel confident about trying to buy it here and like really trying to hold it for like the next 45 minutes or something like
Block buy.
that. Especially not if big orders like that are popping out. Well, where are we? Okay, so the high from before that Fed meeting that really tanked the market was 31. So that's the next kind of benchmark on the upside. 31 and I guess 110 even, right? Like that's too far away for me to be taking a trade thinking that we're going to get there. At least with the time that we have left. So I think that I better just not take a trade today. Where you talked about reviewing strategy code, would you prefer an AI converted version of C#? No, I would rather have the Pine script. If you give me the Pine script, I'll convert it for you. If you want. I mean, if you're gonna give me code, at least have something that compiles and works, right? That's all. But I would rather have it in C# NinjaTrader. I use ChatGPT to make a bot, but there's many errors when I run that bot in NinjaTrader. Yep. So there are some models that have gotten better at coding, but I think NinjaTrader programming is still like niche enough that I think it would be really hard to get an LLM that really writes good code for you. And the problem is still that, like, you know, LLM is not going to give you an edge. You know, that's kind of the big problem with LLMs, is that LLMs are basing all of their information based off of stuff that's already publicly available. So it might be able to combine very disparate, I don't know how you say that, two pieces of information that nobody else would ever think to combine, and it might be able to see that, but it's not going to be able to come up with like completely new piece of information. Disparate kind of sounds to me like a word that maybe Seth just shouldn't use. Yeah, like anecdotal. That one, we have to use that one because it's the proper word. So like I think the issue is that like if I use big words, it will intimidate some people. It'll make some people think that I think I'm better than them. It'll make some people just not understand what you're saying. And so it's generally better to kind of simplify the language. Oh, and then there's people that aren't native English speakers, which there is a decent enough of them that watch the channel that we do have to consider that too. Right? But then there are also situations where certain language is the language that is used in that field. So I'm using those words because, one, that will give you things, it will help you like, what should I search for? What are the words that I should search for? And two, it will also kind of help you identify the people that really know what they're talking about and what don't, because they will know the language, right? Telling one of my sisters about the need to convert to C#, and she works for a big tech conference promotion, and she has met the guy who created C#. Oh, that's interesting. Do you have an opinion on RFK Jr.? He seems crazy to me, but I don't really pay too much attention to it. I have like a more broad opinion on this. Right now, it seems to me that the left is having absolute conniption fits about the administration state being dismantled right now. And I really think that they are just the amount of panic that I see out there on Reddit does not match the reality of what's actually happening. Like, okay, RFK Jr. might have some crazy ideas about things. Okay, so what if he puts more research out and or professional recommendations about things related to vaccines or whatever? Like, that will probably just be more opportunities for us to learn things. Everybody was making a big deal. Like, I saw this one thing was like they were making a big deal over that he wants to ban food coloring additives. And then before he got in, they banned the food coloring additives anyways. Like, come on. It's not the end of the world. It's only the end of the world because that was your base of power and you're watching your base of power get destroyed. And you know what? If it's that important, you shouldn't have made it a political thing to begin with. So blame Obama. But I'm just watching everything on Reddit right now is hilarious to me because like every day they're flipping out. The other one was the U.S. is going to take over Gaza. Like, I kind of feel like when I was watching that press conference that like Donald Trump doesn't necessarily agree with his policymakers. Because on one hand, he's saying, we're going to take it over and rebuild it. But then on the other hand, he's saying, like, nobody should want to live there. They should all go somewhere else. Okay, so which is it? He's taking it over. The funniest thing I saw yesterday was the meme that says, like, Americans, when they realize that the 51st state is actually going to be Gaza and not Canada or Mexico. Or Canada and Greenland. Oh, man. I think it's so funny. Why is it that when it's Democrat politicians, like everybody gives them the benefit of the doubt when they say something dumb, we understand what they're really talking about. We understand when what they're saying is bluster and when it's not. But when it comes to Donald Trump, all of a sudden everybody on the left becomes autistic and they can't understand anything about context or any of that. Like, it's just is so weird to me, but like it's just like playing out on full display on Reddit, and it's funny. I think it's funny. Probably what's going to happen is you're going to get a bunch of federal agencies are just going to get decimated. And that is going to reduce the size of the federal government and make people realize that we can run the government a lot leaner. But then it's also probably going to expose some things that we probably should have kept, right? And so then we'll have to deal with the issues that are created from, but it won't be the end of the world. It'll happen and we'll deal with it. And it's just a different set of problems. There's one set of problems when you have too much government. There's another set of problems when you have too little. Yeah, it'll just be another 4 years of doomsday prophecies without fruition. Did you ask Andrew Klee now about market making? No, not really. I like to meet with the people I'm interviewing beforehand to give them an idea about what we're going to talk about, so that I can like refine my questions and so that they can think about it, so that they'll have good answers when we're there. But his specialty is in momentum strategies, and market making's not his thing. Some clean breaks lower here. Well, it did break by one tick in Xeon. You see, I so far it looks like it is playing out, really justifying my decision to not touch it. That I had already missed the opportunity. Problem is the prevalence of very real mental illness amongst your leftist Redditor base. Like, some of them, people might really hurt themselves over this stuff. Yeah, it is true. So like one of the things I wonder about is like, okay, why is it that all of a sudden everybody's autistic about when it's Donald Trump? Well, maybe it's because that particular group of people that are commenting are autistic, like they're definitely so I mean, this is an interesting subject, and I really hope that they do more research on it and get to the bottom of it. Do people on the left, are they really have more mental illness? Does mental illness lead you to be a leftist? Or is it just that people on the left are more likely to seek treatment? I don't know how you differentiate those two. Well, it's been studied, but it's kind of hard to prove which of those two it actually is. We only know that there is a much higher prevalence of diagnosed mental illness on the left, particularly among leftist women. AO says no trades today, Seth. Yeah, no trades for me today. So like the thing is, if I can go back and kind of explain a little bit more in detail, like what I was thinking. I expected that number to be worse than expected, but there was already a lot of trend. And, so I said, I expect buying flows today. But it didn't happen. The first flow that we saw was a sell. That's this right here. First flow that we saw was a sell. Then maybe they were front running the news, but it was just like a return back to where they were. And what happened was we were at the break-even point for the market maker when the news came out. So I'm thinking it's going to be really hard for them to maintain this. Right. So then I started thinking, well, maybe I can take a small trade. So there was a small little bit there at 24.5 right here, and then it did it again. But they were both really, really fast. So I think I did miss a trade. And it wasn't like I missed a trade because I was talking to you or anything. It was just I was sitting there watching the DOM. I was kind of thinking about it, and I just didn't have the guts for it. But it was only going to be like a small trade because it's going to be really hard for them to maintain that momentum. And sure enough, they came back, and now they're starting to do this thing, right? So now they probably just consolidate around this price for a while. or for the next 30 minutes at least. So I don't think that I really don't think that there's opportunity for me, at least. Maybe on a swing trade, like if we had a swing trade from yesterday and we're long, I think you'd probably just continue to hold it. How much of that is performative? Okay, so we're starting to talk about things that like are dangerous to talk about, but I will talk about it because it does matter to trading to some extent. Okay, when you look, there's a really significant gender difference in this, right? When you look at the differences between men and women, the biggest differences are, one, women tend to be more agreeable than men. Almost all of the highly disagreeable people are men. And they've also done studies that show that like testosterone correlates to men being disagreeable. That basically to be the person that just outright rejects what the group is saying when everybody is applying their peer pressure and everything, it only high testosterone men that do it. Maybe not high because I do that. I'm kind of like that. I wouldn't consider myself high testosterone. Probably just on the slightly under average. But then the other difference is their propensity to take risk. Men are much more likely to take risk, and those are probably related, right? Being disagreeable and going against the group is a high risk, right? The other large gender difference that we see is in neuroticism, which is your tendency towards negative emotions. Okay, so and the evolutionary sociology or what evolutionary psychology explanation for this is that the biggest thing on the woman's mind is surviving and raising the children. And so having a propensity towards those negative emotions, it increases the chances of them surviving. She doesn't have the same kinds of pressures put on her where taking big risks is really advantageous to her. And so having that high propensity to neuroticism kind of, serves at least what women did in the past better, right? Now, for trading, this is kind of an interesting thing because it kind of explains why almost all traders are men, because we're talking about high risk activity. It's very unusual for a woman to be attracted to this. And if they were attracted to this, they'd probably go into portfolio management, right? But it also, men often take too many risks, and so it can kind of help them. And I think that I would rather deal with the problem of I don't have the guts to take more risk than the problem of like I keep doing stupid things. Okay. But when it comes to politics, what it means is that yes, women are going to have a higher prevalence of these negative disorders with the negative emotions like depression, anxiety, etc., etc., etc. Women are just going to be more prone to that. It's built into their biology, apparently, or at least that's our best theory of it, right? So now we've kind of gotten into this strange place where one political party has essentially banked everything on appealing to one gender. Democrats believe that the strongest arrow in their quiver is abortion, and so they shifted everything to appeal to women. By and large, young women are Democrats, and so when Democrats lose, you see the neuroticism come out. That's what it seems to me, but risk-taking increases at ages 19, 29, 30. Are you sure? Because I kind of feel like that you know, a person at the age of 40 would have less reason to take risk than a person at the age of 20. But it's a response to the confrontation of aging in the next decade of life. I certainly know that men change every 10 years. Like, there's significant changes in your body and everything every 10 years. For me, I am going gray, man. I feel like it's been so quick and everything, but like all of the hairs on my face are turning gray, man. You say lots of buying. I'm still seeing them net sell across the board here. I'm really not, at least within my time frame, I really don't think that there's going to be much more upside opportunity. Now, the S&P 500 is doing something interesting because they kind of, well, let's see here. They jump. No, they didn't jump on the news. They sold on the news. Okay, so there was a brief upside, and then they got crushed very quickly, and now they are coming back up to it. So there is quite a bit of indecision in the S&P 500, and I have no way to tell what that's going to happen. Oh yeah, so going back, I think that for the public-facing figures, it's almost entirely performative. Private individuals, well, maybe. So you know, this is kind of one of the things that I was getting into in the short that I did yesterday, which is that like the people that are in positions of power, like how do they get into those positions of power? Especially people in the business world. Well, the way that you get into positions of power in the business world is you take big risks. So Elon Musk is where he is because, you know, he's got his set of business heuristics and he executes on those faster and more confidently. A lot of businesses, if you have an idea, like other people are going to have the same idea, and so you just have to do it faster, right? So that's where like you know, just degenerate risk taking can be a big advantage for these people. This is where like irrational self-confidence like Kanye West has kind of plays into these people. And I think on the political side, this sort of like almost narcissistic, although I wouldn't say that they have narcissistic personality disorder, but is just kind of like this firm belief that they are absolutely correct about, you know, they have the correct ideology and that will answer everything. That's what people want to hear. And they get super confident about it. And then, you know, they are extremely outward about how they feel about things, especially on the left. That, you know, if something is happening, yeah, you know, I act like it's the end of the world. Because that attracts the attention, and that's kind of what makes them politicians now. So, yeah, it kind of is performative, and basically what ends up happening is those of us sitting on, I think the reason why it's kind of, and why I want to point it out is because it would be really easy for you to go on Reddit and see everybody panicking and going, oh, I better be panicking too. But once you understand the microstructural mechanisms at work and how those result in the wider scale behaviors that we see, which is Reddit just absolutely losing their mind, then you can kind of see that, oh, this is not a reason for me to be panicking about something. And you can kind of just enjoy it for what it is. Because once you detach yourself from it, it's pretty funny. Have you considered applying your developer skills to app creation? I mean, sure. Well, you would keep talking about, I want to make a trading app. I would love to make a trading platform. There's lots of little things we're talking about. We had some issues. But, oh, by the way, Uzi, did you try that test? installing my indicators and seeing if my cumulative delta fixes it and then theirs is still broken, to confirm that it really is that NinjaTrader broke their cumulative delta reset in the last update. But there's some things in the way that NinjaTrader works that I'm like, I think I can do better. I think there's a couple of major things that we could do. I should take risk on it. I'm really kind of no, when I started applying for jobs yesterday, I felt better about it because I was able to find a good number to apply to. But the number that I applied to didn't seem like as good, or like the technologies didn't match my stack as well, and things like that. So, but I do have like 2 interviews set up in the pipeline right now. One that should be in the pipeline, but I think they're ghosting me. But so I'm not sure that that's anything's gonna come and save me. So I have no choice but to take risks and make my own business. And probably the best business opportunity that I have is to build an app. But the problem is that the same thing that is kind of killing the job market also kind of kills my ability to effectively take on risk to build this startup. So interest rates are just too high. The money out there for startup capital is just not there. I think that it would be very, very difficult to convince any kind of angel investor to give us $2 million to develop a trading platform. I would have burnt my house down if I didn't notice the smoking sizzling plug in the wall, so I get to keep my dude, that happened to me the other day. There was some sort of USB, Chinesium built USB power adapter plugged underneath the bed, and like I stepped on it and it like burnt my foot. I'm like, oh, better unplug that. When I was younger, I had all of these ideas for apps. One of the apps that I wanted to have was something that was just for like benchmarking your computer. Like they had benchmarks out there, but they didn't really have something that was like you could benchmark it and compare it to other people, and then there would be all of this information about the hardware, like a wiki for all of the hardware needs out there. I guess it still kind of doesn't exist. But this was before Facebook. So it was like, oh, there could be a website and a forum about this. There could be a forum about this. And I had all of these ideas, right? And then what happened was Facebook came along and filled the entire social media niche on the internet and killed all of my creativity, essentially. Didn't have ideas after that. Ideas, it's like, here's an app that we could build, that we could make a business out of, yada yada. I just don't have those ideas anymore. I feel like now maybe part of it is also I'm on medications, so that kind of hurts the creativity side of it too. But I used to have so many ideas about things that I think I should be doing and writing down, and I don't now. Now I'm like, oh, I would love to start a business, but what? So there's this one thing. It's kind of funny, because I think a trading app would be a good startup. But it seems to me that most of the people that go into the startup world really don't have any clue what they're going to make when they enter into the world of let's make a startup. They go in and they start exploring opportunities, and the opportunity comes to them. And in some respects, that's maybe a better way to approach it. But it's just wild to me, because to me it's like I one of the things I keep seeing is I'm following the startup subreddit, and I'll see these posts all the time. Here I started my own startup. I'm so glad I did this. Today I just had my first sale, and I'm like, whoa. You are a quote unquote startup founder, and you sold one $20 product? And that's what you're bragging to the internet about? Like, what? That's a startup? Oh my gosh. Because we've had about 50 people. We have about 50 customers on the NinjaTrader indicators. You know, like I'm way further along than most of these people. And I feel like I know nothing. Oh, man. Yeah, ADHD medication does play into it, but I really think it is. Because this happened before I started taking meds. Facebook coming along really killed a lot. Like, at that point, all of the ideas were related to, well, you could do this on Facebook instead of a business, right? Because basically what happened to my generation was there was this huge explosion, the internet, and then very, very quickly, a few small players consolidated everything and dominated everything. Google, Facebook, Apple. And at that point, like, individual websites didn't matter anymore. It used to be that, like, everybody had a little blog or a website, and you could just search other people's little websites for days and days. And then MySpace came along, and nobody did that anymore, right? Everybody just interacts in these walled gardens. It kind of sucks. To me, it kind of sucks. I miss the old internet. I hear you about Facebook. You know, the thing with Facebook is I don't think it would be quite as soul crushing if Facebook communities weren't so shit. You know what man, Facebook communities are just the most. So I've actually created some So one opportunity that I started with my wife when we first met was we started a Pokemon Go Facebook group. And I do my duty, okay? I go and I delete all of the spam. I review all of the people that get admitted to make sure that they actually live in Utah and all of these sorts of things. But I don't like it. Like, the things that people post and the way that the community goes and everything, I'm just like, okay, like, I'm gonna provide this service for you guys, but I'm not getting involved. This is just too dumb. And I don't know what it is about the way that Facebook communities are set up that creates this, but, like, it's just like the dumbest content all the time in Facebook groups, man. They sucked it all into their storefronts, maybe make an agnostic storefront with lower fees. Has anyone done that? Yeah, I don't know. So here's I have an idea. I do have an idea that I'm interested in, but the problem is that my idea is way too abstract. Okay. So I really like these things where it's like, I think that a lot of the problem is that we as humans are not scaling. So we're really good at interacting with a small community of 200 people. That's what our brains were evolved to do. And we can't handle correctly living in a city or you know, interacting with 300 million people at the same time, which is essentially what we're doing on the internet. So all of our modes of being are just not scaling. And so what has happened is everything moved onto the internet. All we want to do is browse our phones and be on the internet. And we don't go out. We don't have interactions with people. When we don't have that small core community of like 200 people that would actually provide us meaningful, lasting connections anymore. This is why you go and you play a game like Stardew Valley, and all of a sudden it's like, oh, okay, small community. I'm building lasting connections with people in my community, and I'm actually rewarded for the things that I do, instead of just constantly putting content out there and hoping that something maybe possibly happens, that I'm one of the 300 million people there that's chosen to be by the algorithm to be popular that day, right? No, I actually get rewarded for my work, right? So I would like to see social networks and or social games that try to address this. And my idea is something that would take the place of a cathedral. So like, what was the place that a cathedral would play in a community? Is that would be the thing that like everybody was donating their free time and energy to building. It takes a long time to build, possibly generations. Your people build all of these elaborate crafts, stone cutting, making glass panes, etc., to build this thing, right? That they all build together. And so there's games like Minecraft, you can go and you can build, right? But I want something that is a little bit more focused. It's like, you know, you're building this thing together and there's certain goals that the game gives you that you're building it together, and you build it together as a community, and the community can only be like 200 people at 200 active people at a time. And you know, that group's full, you get put into a new community with random people that you've never met, and that just happens to be where you got placed. And maybe there's algorithms that know how to place people correctly, but you get your community is chosen for you, and your reach is limited. You're not shouting out to the entire internet. You're just interacting with your small community. Yeah, I think Dunbar's number is 250, but yes. It would limit the size of the community to Dunbar's number in terms of active users, like active a month or active a week or something like that. So if somebody goes inactive, then somebody else is allowed to come back in. And if you've been inactive for too long, then you get kicked out. Extended families also lived closer together. Yeah, that's true. That's true. See, part of the problem with Facebook is that Facebook was supposed to be about your friends and family, and then all of a sudden everybody kind of realized that, well, the larger that your network is, the more powerful it is, so you try and add as many people as possible. Kind of screwed it all up. Really did. So I don't know how you do this practically, but I would like to see a social network like that. I want to see a social network where I can go and I can interact. It's like Reddit, but I'm not talking to everybody on Reddit. I'm just talking to 200 people. Well, it does exist. It's this stream. We have this stream. It's very good. The small streamer model works really well. It's super, super great. I want something that's more interactive. I want something where, you know, I'm constantly building. This is kind of like I'm building things and you guys are all watching and helping me, right? I want something that's way more collaborative. But like I said, it's too abstract. You know, how do you turn that into something that's a fun game? I don't know. Too hard. I do think that like some degree of art would have to be involved with it. Well, we are back to 22. So 22, there's kind of like this gap between where they didn't hardly trade anything, like at 21.5. I'm kind of wondering if they're going to come back to that 20.5 and then maybe try and bounce. What about the cost basis? Did the cost basis come up? No, it did not. Oh, that's very interesting. That's very interesting. Oh, not quite sure what to make of that. Cost basis didn't really move. Does that mean that there's more downside to this than we realize? I don't know. But that's the end. That's the beep. Time for me to go. I guess I'm gonna continue. I got one video about how much money do you need to day trade, and I got one video about which product should you day trade. Because I got into this whole thing that's like the startup cost is like way too much, so I gotta split it up into 2 videos. So I gotta finish those edits, and I'm gonna try and record this afternoon. So I'll see you guys tomorrow. And then Friday, don't miss Friday, because I think that this non-farms could be a significant one, but we'll see. Stay excellent, team.